So good morning, today is CPI, and on the daily what I want to see is there's a volume imbalance here that only was traded to the upside. So I want to see price come into the middle, take this wick down and come to the consequent encroachment of this volume imbalance, also this order block there. So we have so on the daily we have a bullish order block here, so mean threshold is around this level. So if we consider just the bodies, there, remove that first. So to measure consequent encroachment, middle threshold is like this. What's going on? What's going on? There. So 17,486, which is more or less below this consequent encroachment of this buy-side imbalance on the 1 hour, but there's a draw here and this volume imbalance, so price needs to step through this, possibly coming to the lower bound of the pitchfork. So this is also between this upper bound and this lower bound from the pitchfork is also the mean threshold equilibrium. So price might want to come here, tag this on CPI, and most probably resume higher. So drawdown this morning, trying to find an entry, but I think we are set in 3 micros at 4 o'clock. So, and I entered more or less around here. Was looking for longs, but it did not pan out. So now we are already surpassing this hourly buy-side imbalance, and it's just stepping through. The DXY is pushing higher, and I believe on the DXY level we will be tagging this equal highs on CPI, and which is roughly 0.3, even can come higher. So with the 1% move to fill this, this is a weekly volume imbalance, so fill this weekly volume imbalance, possibly even coming higher. If this starts to be filled or this new week opening gap surpassed before 8:30, then I'll expect a spike higher to these levels. This order block there. So 105.37, which would be a 1% move from current. So this is what I'm expecting today on the CPI number. Dollar has been bullish, so it's making his way above this buy-side imbalance. It came before, started, retraced a little bit, but now once he had cleared this first initial try, it will fill this gap up to this 105, possibly the middle of it. There's on the daily. So there's a daily here, let's do it. So if we consider instead of the 4 hour, or the weekly, the daily, we have still plenty of space to just come above. So consequent encroachment, so of this is there, 105, 105, more or less even, and that's it. That is the rationale for today, which will push euro lower. So it is on the daily, at least take this sell stop liquidity there. Stabbed it, most probably coming as low as 1065. So for a down move, our trade is short NQ, it's with 100k at current, and keep diving. So we had 2 o'clock Frankfurt, we had 3 o'clock London, and then we had 4 o'clock and continued lower. So at 4 o'clock just did another Judas swing, came lower, took some stops and resumed lower. So I believe until 5, which is here, so continue to drop. So I'll be putting my trade better than break even. We are now breaking this lower bound on the buy side imbalance on a 1 hour. So bullish PDAs are being broken. Just put it there, I don't like Stucknap. It might want to come here, touch this order block still, unless it's very, very bearish. So this is the order block on a 5 minute. Bearish order block. 1-2 candles, and we entered in the middle of this order block on a 5 minute basis. On a 15 minute basis, the bodies are there, so my stop now stays above these bodies on a 15-minute perspective. And while I'll just observe how this dismantles itself lower, there's buy side liquidity here, so I might take one. Actually, what I wanted is just to take this tree for a $2,000 buck, so my risk is now $4. So today's CPI, if this gets a push lower, there might break all these candles and just stab this. So I'll keep my stop there, break even. Actually, I'm planning to possibly exit before 8:30, so let's see. It's not a day to be trusted. It's not a day to be trusted. But what we can see, that price came, tagged this middle of the pitchfork level. So that is coming from far away already. So if we see a drop like this, once it touched this 95% level of the pitchfork, it just retraced that much. Let's see. So that's the power of this swing there. If we make the same thing, we project it, so the price got rejected above this level, so it could come all the way up to these levels and push even a little bit lower because today is CPI. There. Take the wick, take the bodies. Yeah, there's a draw here. This buy-side imbalance on a 1 hour. Hold price here, there, push it higher for a Judas swing. Took all these buy stops, and now it's a clear market maker sell model, possibly up to this level here. If it wants to turn, or if it wants to still keep bullish, then we need to consider that this might be an OTE from this level, and our entry bullish would be around this level, which is constant encroachment, middle threshold of this buy-side imbalance. Do not touch this fair value gap, so one partial can be taken at that level, or even these two partials, and then leave a runner to run the 79% retracement level and middle threshold of this daily volume imbalance. See if it is well anchored. No, it was not. So we are on a daily. Now let's freeze this. So now you cannot move anymore. So there. This would be the level to exit, a bit above, and then we have a new week opening gap over there, so this could be also 17,505 level. So more or less all aligned to the downside today. Let's see if price can counteract this buy-side imbalance. So I think we are safe to put it here. There's our order block on the 15-minute. The open is here, so my stop goes there. And we are now retracing up to this consequent encroachment, finding possible resistance. We see what's going on with ES. So OT would be it's clearly can take this level still, but here on NQ we are already at 50% level, so tag the 79% level based on this swing low. And what concerns me is that if it takes this, well, it did tagged it already. Now I want to see price being rejected, or I'll need to exit. Or I'll need to exit because this might turn here. That's a risk of the market turning all these weeks. See what's going on in the XY. It's pushing lower. So anyways, I have a bearish stance, so I'll just be putting my again. So came before consequent encroachment, so this is still very bearish. So if we rank this by this swing at one, yeah, it's, if we reject from this level, we are safe for the downside for a longer period. We are reaching 5 o'clock, which is the turn. It's London close. London session. Do not want to leave too much juice, so this is already rejecting. I don't like this candle not having a wick. On a 3-minute basis, 2 minute, 5 minute, let me see. 5 it does have a wick, 3, 2, no wick there, so manipulation for the downside. Might want to tag this. I'm not confident. I think this might turn. The XY is coming to the new week opening gap on a bearish move, and this candle not having a wick, I believe we might see a turn here. So my stop goes exactly above this wick, just in case it wants just to explode for the upside. I think it wants to go. Yes, it's already. There's a weak candle over there also. So they drive price lower, so there's risk all these candles to be taken still. And I'm running on tight stop losses, so with the profit of $1,100, only 3 micros, so let's do like this. Let's risk a little bit and put it above consequent encroachment. So could take this week there, but let's trust the OTE entry here for going lower. Okay, so if it takes all this week, would be a very positive sign for the downside. The price is struggling here. On the 15-minute, we are driving lower since Monday, while GBP is more or less counter trend. Came for the stops, and let's see if it wants to. Well, they are reacting to this move, but NQ is doing his own thing, and let's see if they want to drive it lower. So same lower lows on both indexes, so there's no SMT divergence here. On the 32nd, let me check the bodies on the 5-minute. Lower, so can continue a little bit lower. Let's see if we can overcome the 5 o'clock. At 5 o'clock might see a push higher. It seems like it's preparing to do that push. At the XY it's already dumping here. approaching the new week opening gap. So we are basically 40 seconds to go. I'll reduce by taking one profit, so, and keeping two in case this just wants to come above. So 3 seconds, 2, 1, 5 o'clock. So I'll remove this. This is the 5 o'clock. I can always come back in. I have plenty of room here to put some more shorts up to this level where the stop is. So the XY is dumping, and this is not synchronized at all markets, so we are seeing Euro moving higher on that push lower, but again indexes are doing it their own sync. So what I will do is, there I'm entering two shorts, putting them at break even. Too many drawings does not allow even to put a stop quickly. So we entered another short. Our stop goes above this level. Let's see if this wants to go higher or keep this moving. Yeah, 5 o'clock. You see what I was saying? Let's put this at break even. So I entered two shorts prematurely. So there's a risk of my stop being taken unless there's a SMT divergence between NQ, not taking this high there, and ES just took those stops. So there's a SMT divergence here, so my stop now goes there. And I'm now seated with 4 lots instead of 3. And might let it roll now. Let's see if we take another trade. When it goes below this level, we still have some room to put another short up to this protected area. So my buying average would decline a little bit. So let's do that. So there's a no wick. Well, it's not actually a no wick candle. It's a tiny wick, so I will not sell there. Just see another thing. So if this is equilibrium of all this range, let's remove this. If this is our dealing range today, it might be because we are at CPI and we premium versus discount, so we are still on a premium. There's the level, so we could afford entering another short because we are still here. So equilibrium would be this level there. It's equilibrium. Consequent encouragement price is still maneuvering around this level, so a clear SMT at 5 o'clock there, and as similar to 4 o'clock we saw this should swing higher at 4 o'clock, but this was a bigger push, so came all the way here. If we do the same, this might also occur right now, so which means it will take all these buy stops and come to this level. Do not take that one, and I think that's the risk of this happening, because this was a minor push, so which also means that if NQ would do this type of move, then we would turn bullish instead of bearish. But as we see here, there's I think they want to print a SMT divergence, so they made a very smaller retracement at 5 o'clock and keeping a bearish stance. So this is what they did instead, so half of the swing, and now it's already dismantling itself. So I'll enter another short and will putting my stop at break even. There, and so we are now exactly on top of that wick. Price is moving lower, so 140, and we might see some interesting declines, so we'll take one profit there. There's a consequence of the range, so this is middle of the range, so I'll take one there, and there's another that can be taken here. In fact, I see one thing. I believe price can do a 200 handle today. We are sitting at 4 lots. This is 3,000 move. Euro, dollar, I mean. Okay, so okay, rejected. So let me just put this differently. Does not allow me to put this. Why? Maybe because of this. Let's do some projections now. $220, so balance is already above yesterday, so spent some monies trying to get in today, and eroded a little bit of the 200k, but we have recouped it already, so but it's open balance. Well, price is pushing higher now. Oh, we have 5 lots. We are sitting on 5, so this might be a trap. So lower low, higher low, tagging this. And resume lower. So we are seeing some SMT, supposed SMT there, but might be just a trick. So it's rejecting at that level. This level is the daily. Just see. So we have this day's low as a PDA, and we have this day's low as a PDA, and we are now having price pushing higher. Yeah, there's some signs of SMT on the lows, but I don't think so due to the fact. Let's risk, let's put stop exactly at break even and accept the fact that the XY might want to push a little bit higher. Nope. I'm dropping. Take it here and then prepare to enter longs. Yeah, this type of some kind of bear flag. So let's see. The XY is coiling here. Might do all this coiling up to this upper levels. Starting to coil, and with potential to go up at least to this new week opening gap again, which might push this lower. This euro lower, GBP lower, so there's a SMT divergence on the highs there. So GBP came and tagged this. DXY failed to make a lower low here. It took that low, took this low, and choose that one. So euro failed to take that low, but a significant one is that one. So we are still to arrive there, but GBP already took. So there's not a correlation here. So there's SMT divergence, USDX, GBP, SMT divergence. So this is a run on stops, and NQ it's also driving lower. It's bearish, extremely bearish. So that was a trick. This was a trap, I believe. You know, false market structure shift, coming higher, fair value gap, touching this upper bound, and then reject it and going lower, unless wants a very deep retracement to go now higher and making this as a change in state of delivery, making this 10-second candle as the change of state of delivery. I mean, there can also be. So let's wait and see. So this would be turning bullish from this level onwards. If it takes this level, then it's gone. Put on the file. Yeah, actually that's on a 10-second candle is that candle. On a 5-second is this one. So needs to take this level out. 858.75. So we took it already. So let's keep on moving to the downside. So it's coming back to that particular level. And now let's see. Took that level, so should not be broken if it was bullish. After this side taken, coiling up, but it's clearly a bearish order flow. So let's trust it to the downside. There's equal lows here, so buy stops are being engineered in sell stops that might now be taken. So sell stops here, came above, rejected, people seeking to go high, and then might fall apart again and dump it. So it's finding some support there. OTE again. 50% level, should not surpass it. Let's put our stop above this, so a little bit above the side imbalance. The XY is doing what? It's coming for this fair value gap. Which one? Hourly? Yeah, hourly fair value gap. Forgot to put label on it. So this is high probability trade, because if it comes here, tax might reject it hard. So 1 hour in Q, we are still here, coiling for the downside. CPI day, so price is hesitant to make large moves. Again, so came 62% level. From this is 79%, from that one 62%, so OTE, enter shorts, take the stops, and then lower. Let's take something off there. We have also buy side there. I'm a little bit tired of this trade already, so we'll be exiting once we take this one. There's the middle of the range here, so I can take 5 lots. And last one, a runner to that level. If we would believe that this comes all the way down, this is not the wanted. So to remove some lines is to be too cluttered. Let's remove this one. And so we are sitting with 5 lots whose price is below the consequent encroachment of this fair value gap. Middle of the range is here, so if we drove price up to there, it's 400. It's a possibility. What we have secured so far is 75. So I need to take something off to improve my balance. So take, let me see where. There's buy stops there. So I'll take 2 there. Opening of this candle, so consequent encroachment, it will not hold. Then another one there. To make sense to be in this trade, I need to pay myself. Improving my profile in terms of stop to break even or better than break even. So 250. So my objective is $50 per day. So if I take now okay, starting to take it. There. There's the balance of the price of the range there, so I want to see a push down there for taking. If I take the 4, 275, so another $100, which would be nice. There's also this 45 minutes, let's put on an hour. There's this week here, which concerns me. That middle threshold, it's there, so I'll be taking a portion there, drive the rest to the middle of the range. So trailing it down. Want to see the XY go out of this level and push it higher. Yeah, that's buy stop, buy side. This is the week. Oh no, a 1 hour week. So now I will be protecting the trade starting from there. Okay, so 200 bucks. So in theory we could leave it like that. Take another one there, just to the middle of the range, and that's it. So 278. We are above the daily objective. Lowering the stop. Too much there. So wait for 475. So 45 and a quarter. Nice. There's this volume imbalance. Now I'll be putting my yeah, want to see it tagged. So this is the middle of this week, discount week. No week candle, don't like that. So there's another. That is a week. This is a week. So why is stalling price here? Because it took that buy side liquidity here. So this was sell side liquidity there, and is now retracing a little bit, but still might need to have steam to go lower. And then there's another one here, another level similar to that one on a 30-minute, which is this one, 34 and a quarter, 35, putting at 35. How significant were those sell stops? See. Now this is the limit of the order block there on a 30-minute order block. Well, I'll be tagged. Let's drop it. Okay, 257, another 50 bucks. And we are progressing, so trade is gone. So what do we see? Calling, sell side liquidity taken, center buy here. Let's for a quick scalp. DXY is doing what? Still stalling here, pushing lower, so this gives a sign to NQ that he can stop going lower. Let's see, I want to risk what I've done so far, so if it just expands to the upper side, no it did not, still wants to tag the lower prices. Anyway, 253, another 50 bucks, and done for today, even on CPI. Not an easy price action. Yeah. Very slow. And the XY is going down, this is also going down, so there's no sync between markets. So low, very low probability. So taking 50 bucks in a low probability time of day before CPI. So CPI is at 8:30 today. There. So there will be still some manipulations all over the place. So let's just drop it. Bye bye. Keep in touch.